Hey guys, welcome to the market breakdown this Monday at 7 p.m. UK time. So, last week on the call that we conducted in the Discord, it was a live call. We got through the GBP USD trade and as well gold, etc., that we're gonna talk about in a minute. So, first of all, I want to talk about GBP USD. So as you can see from my chart here, we had a nice blast trade last week. A nice run to the upside to the H4 supply area, or let's say order block, right? So last week, price reached the order block and now currently is in the range. So I'm going to delete this stuff. It was a nice trade, 1 to 3.5%. A blast, I must say. So let me delete this stuff real quick and we're gonna go right into the analysis for the current week. So this current week, I want to mention that we do have FOMC on Wednesday, which basically you want to be careful trading before the Wednesday. So usually this is my personal experience, okay? My personal how I personally handle the trades and the trading itself. If I see that there's a FOMC, I kind of do not trade before Wednesday because the price, as you can see now, is currently in the range. It does have a lot of low volume, specifically on the higher time frames such as H4, H1, etc. But definitely you can find some trades on the lower time frames, like 5 minutes, 1 minute. But usually lower the time frame, the bigger the risk, right? Because like I said last week on the call, higher time frames are king for the bias direction, even if you're swing trading or day trading, or in that case. So in this case, we're gonna go with the GU. So first of all, I'm gonna start with the weekly time frame because it's a new week. So last week, what happened? As you can see, I have a monthly fair value gap marked here. We kind of reached it. Let me go into the monthly, gonna see. So this was the fair value gap that I was anticipating that GBP USD is going to cover. And from this point, we're gonna go, given the fact that we are bullish on the monthly, obviously, we do still need to have some pullbacks on lower time frame. And given the fact that we have the fair value gap to the bottom, I mean to the downside, it's still monthly. We're gonna see how this looks on the lower time frames. So whatever I do in my charts, I always write it down so I don't forget. Even if you open the charts in like 3 days, you will know where you have your things, right? So we have a monthly fair value gap at the round number at the 3268. We can say 7-ish. So I'm gonna round that up. I'm gonna round that up to 70, like that. Okay, so currently monthly we are bullish, which is nice. I do expect some more to the upside, but let's say if in 2 weeks we are entering in the Christmas time, there's not going to be much of a volume anymore in the markets. It's like end of the year, so you want to be careful about trading. You want to take some time off and go from there. But if the trade is going to be presented, obviously we can take advantage, no? So monthly bullish. Let's start with the weekly. So how weekly opened, it's very important, right? And we can see that monthly and the weekly goes hand in hand with the fair value gap, which is fine because we can let me delete that. We can expect that price can continue lower, even though it opened bullish. You see that it went up and rejected, right? So this is fine. So we can expect on the FOMC on the Wednesday that price can push down, cover the weekly fair value gap, consolidate for a bit, and then go through there. Okay, so I do expect price pulling down. Okay, we do need to see the major, some sort of pullback, given the fact that we had a nice daily run to the upside. And as well we have daily fair value gap, which is like monthly, weekly, daily. This is amazing, guys. This is amazing. So as you can see, we are losing ground, we are losing momentum towards the upside, and we are slowly pushing down. So daily opened, bunch of rejections. Obviously we have a Friday, we have a Thursday, and Wednesday was a blast, and we are slowly pushing down. Yeah, so let's see how the H4 looks like. So H4 currently in the range. Now we took some liquidity up. As you can see, we took out this previous high that wasn't protected. In this case, all the stops were triggered to whoever got in there and being impatient. Yeah, it was triggered, taken out. Now we are in the current range. So the start of this impulse movement to the upside on H4 is definitely down there, which took liquidity of this structure and rejected that H4 order block down there, which is the entry point that we had, as you can saw on start of the video. It created a bunch of fair value gaps in between the impulse movement. I'm gonna apply the FIP. Let's see to where we can expect. So 60.02 and 705 level in between that, which we also have a breaker block. So this is the breaker block. And because this is kind of a very big candle, I'm gonna put it on 50%. I'm gonna mark that up. I'm gonna say we have a 47. I like it because we have a 50-ish price number, which is amazing. Round number, we have it right there. I'm gonna round it up. We can say H4 breaker block 50 off, 50%. Okay, so we know what this is and that we can possibly expect for price to return to this area, reject, respect this region, yeah, and then consolidate for a bit, having a bit of a range in a case. Let's say like this, zigzag, zigzag, having a range, because the ranges, so guys, whenever you see the range and you have a nice price action, this is where the volume is being built up. The orders are being built up, sells and buys, yeah, and then it escalates as an impulse movement. And inside of this, there's no volume, there's no impulse, yeah, it's just a push from all the orders that's accumulated down there. So you have to understand this, okay? So if we're gonna have any sort of the range inside of this region, let's say between H4 and monthly fair value gap would be nice because of the top of this resistance. That would be nice to see the range, breakout to the upside, correction or pullback, and then continuation higher. And obviously we can target the high. We can target this liquidity area. Yeah, definitely. So let's do it like that. Let's put it as a target. So currently in the range on H4, H1, obviously the same. We have equals, liquidity above, we have equals, price is falling down into nice manner. As well, we have a trend line liquidity down there. So a bunch of liquidity definitely being built up. But like I said, I do expect price falling down, okay? Now, you always want to have like two scenarios. So the first one is obviously for price to pushing down to H4BB 50 off and go from there as a structure, breakout and test, and then continuation. Or you can just, from this point, you can just put a push higher, okay? It can push higher, create new structure from where you can trade, whether being bullish or bearish. But you always want to check the higher time frames, such as H4 daily, to have the daily bias order flow, to know in which direction you're actually going to trade, because this is important. So first one is always having a proper direction, whether you're gonna buy or sell. When you have this, then you want to develop your setup and find the trade, okay? Because you don't want to trade blindly. If you trade blindly and think, like, quote unquote, I think it's going to go up, you already failed, okay? Because you don't think, you just react to the current situation, okay? So wait to see the bias, go from there, okay? It's easier to trade like this, because if you know, okay, I'm bullish, I'm just buying, well, every pullback, every structure, every breakout, it's your position. I mean, it's an opportunity to go in, yeah? If that makes sense. So I think the analysis for GU is kind of finished. We're gonna wait for price to return to the area and go from there. Currently, we cannot do much because it's choppy and it's in range and low volume. So we're gonna wait for price to return down. If I mark that up for you, so you can screenshot it or apply it to your own analysis. So just to let you know, guys, this is not a financial advice, okay? It's just my analysis, so you always want to do your own, okay? So let's say zigzag, zigzag, and then we have a breakout, we have a retracement down, and then boom, we go from there. So this is something I want to see. Okay. And I think it's going to be the same for the gold. Still, like, I'm waiting for gold to just break from the range, and then, you know, so we can trade it properly. So weekly, last week bearish but choppy, nothing much happened. We still have a weekly fair value gap to fill, so I'm still waiting for gold to fall down. We took out those highs, the liquidity above. We have all-time high, which is kind of equal high, as you can see on the weekly time frames. A bunch of liquidity there as well. I want to delete that line, and okay, I'm gonna leave the daily to explain. So we took out the previous high. We're falling down slowly, like GBP USD, same shit. Yeah. So let's wait for this. The daily range, nothing much happened. I know I saw some screenshots today on social media that some people shorted the gold on 5 minutes, which was amazing trade. Honestly, it was a very good trade. So like I said at the beginning, you can trade on lower time frames, but you want to be careful. Okay, you want to be with the daily bias, and the daily bias currently is bearish. Okay, so let's wait for price to return down, because obviously we do had very big impulse movement as well, like on the GU. We are currently in the daily supply area region, as you can see. This is a very strong one, so that's why we are, you know, slowing down. And also, like, economically speaking, you see that currently there are negotiations between Russia and Ukraine. So, and we have the FOMC, so I guess this is something, has to do something with that, because, you know, when there's no risk in the in the world, we don't have, like, gold is not flying up, because gold is safe haven, right? So is this the case? If they're gonna reach the decision before Christmas, I think the gold can escalate in both sides. It just depends what the agreement is going to be. You know, we all want peace. I hope it happens finally, and we move from there. Okay. So daily bearish, H4, obviously the range, like I said before. Nothing much. Yeah, nothing much. Let's see where date is. 8th of December is today. So 5th last week took the highs, took the liquidity of this internal structure, falling down, had a nice pullback. Today in the morning in the Asian session, rejecting the supply area inside of the structure, and had a nice run to the downside. So maybe we can explain this situation for a bit. So currently we are rejecting the daily fair value gap. Still, we are building liquidity. Look, this low, this low. Imagine how many people bought from this point. They're still in the profit or break even, okay? But imagine, okay? And now imagine how many people shorted down from this point, from last week. And then imagine how many people are going to get stopped. So that's why I do suggest to you, you can do whatever you want, but I do suggest to you to, you know, don't trade range. Wait for it to break it out and then go from there, okay? So a trade that happened today, it was in the New York session. So this is the 15-minute. You see the nice supply area here. We had a nice push to the downside, okay? Market shift, push higher, rejection, set it down. I think it's more clear on the 5 minutes. Yeah, definitely it is. Okay. See, from this point. So London session, obviously the range, pre-New York session, falling down, New York session, rejection to the upside, and then a sell-off. Okay. I don't know if we had any news today. We're gonna check that in a bit. But like overall, I don't, to give you the bias, currently in the range, same stuff as happened on the GBP/USD. Let we see this going out of the range first, and then trade it. Okay. But everyone trade differently. So at the end of the day, it is what it is. Okay, like that. Yeah. So as of for the news today, nothing happened. Tomorrow we have JPY, and also as you can saw, it was an earthquake for Japan, a very big one. So Japanese pair can be impacted. So tomorrow we have Jolt openings, nothing special honestly. And Wednesday, so the big D-Day, yeah, we have employment cost in the New York Open. Then we have the FOMC later in the day. So kind of everyone is waiting on that, you know. So whatever the FOMC is going to show us, price is going to follow, and we're gonna follow the price. Simple as that. And on plumbing claims on Thursday, so a lot of movement. So you can expect Thursday, Friday to be possibly very good days to trade. A lot of volume, and before that, you wanna chill, you wanna wait, you wanna be patient, smart. That's it. Because usually it's more important to know when not to trade than when to trade. Okay, so guys, I hope you like the market breakdown. If you're not in Discord yet, join the Discord. You're gonna have the link below the videos. Follow us on social media. Have a blessed weekend. The week, and we go from there. Bye bye.